We have started we had earlier that flow chart is symbolic representation of the flow activities of the documents through the selection of origin and conclusion. These are sales, purchase, and wages and products. Each of the main functions are linked with each other. I mean, purchases are linked to the trade payables, payment, sales, sales with the trade receivables. By the flow, the workflows became self-aware and meaning the evolution of internal control. Document repair, copy made flow document using as type of fork alternative possibility. Pyramid file documents alphabetical orders. Serial continue to check the importance unchecked and respectivity. Mm, mm, temporary file of documents alphabetically numerical by the date. Attached, destroyed, initial, signed, books and ledger, posting, sources, keys, and explaining the starting point. Generally, the question is also enclosed in the flowchart. It will incorporate the questions and answers which are looked into the flowchart. This is the evolution of the control system. That's the process of flowcharting. Internal control question contain questions, answers are available in the flowchart. They will be revealed weakness. If the system, its questionnaire is a guide of study of the control system in flowcharts. They are examining the flowcharting techniques, evaluating internal control, sales, and trade receiver function. Let us assume this order functioning, order receiving functions, dispatching function, billing function, accounting and trade receivable, main accounting function, inventory recording. These are the functions that carry out a distinct function with regard of order receiving status. Let's assume the function is through mail to relief form through company salesman based upon the receipt of order customer sections. The internal sales service, the sales are always consequently a number refers to the last number of order books are entered in the order number is a consecutive number, date, party, and other different details. Order received by the customers temporarily filed with alphabetic order. The sales advices are prepared in the set of 4 noting the customer sales data. The one 4 copies sent to dispatch option and the dispatch sections, the dispatch of goods is sent back to the order given, and latest copy of sales details are entered therefore the dispatch and quantity dispatch upon receipt of the latest order. The order received sections enter the date for dispatch and quantity dispatch in the order details. If the quantity dispatches first from the quantity from quantity order, the last copy of sales invoice annexed to the customer order and filled to the customer. If the order is in only party execute. The party of sales or advice is kept in the temporary file memory folder, and the periodical file is checked and determine helpful from order and inventory available. Section gains initiate the fresh sales advice and as my faithful part of the process as part of original and repeated. The latest copy of the order is annexed to the customer's order, keeping customer's file. Salesperson the same advice which is being used in another order receiving section. Purpose of drawing a flow chart is incorporated following narrations or point originating a flow transaction document initiate the internal and external flows of transaction, numbers of copy distribution flows and details, books of any maintain the details are corresponding to source of documentation as exists an alternative possibility. The flow charts of the above may be same. CPO, EA, CPO, SE, and done share books order quantity destroyed executed. We extended to activity flow number dispatch section. It is a logical second stage of operation. And then name, work, and the procedure control dispatch section is assumed to be followed. After the receipt of the sales advice was set forth, the dispatch section arrange dispatch material, put the date in dispatch of quality dispatch. The heading of section initial advice is the latest copy of book sent back to the order receiving section. The first copy is sent back to goods and second copy is a billing department. Third, 4 copies of goods delivered to buyers and it has buyer acknowledgement of the goods and deliver goods and rail and road transport contribute basic, raising the relevant forwarding noting and beating BBR before the flow chart is as follows. The sales route of the general accumulated second copy of sales invoice 2 or 3D. The proposed sales invoice for pricing of the sales invoice done in reference to the company's current price rate is a catalog. Number of sales invoice entered into the corresponding invoice which is a pre number, also number of invoice account. Order a copy of the sales advice which is filled alphabetically. The first copy of each invoice is sent to the customer. The second old copy is sent to the trade receivable ledger, inventory section, and the account section. The billing section is responsible for the raising the credit notes on the basis of document received. Credit note is prepared in the fetch of 4 and distributed exactly same way as invoice, inventory, invoices, right, not a billing. Now the flow of activities and the seasonal flows covered under the account section, inventory section, and they together sequentially assembled and constantly complete flow of sales, transaction, trade receivable. These flows are being prepared by the basis of approach of symbols used in the analytic auditing by skinned contestant. This is a study system of the subject and flow of subject to preparation of flows are amplified and letter. It is now let us do not know that flowchart reveal the state of internal control close to look into the flowcharts following. Advice into the salesman through the preparation of same sales advice from the preparation section. There is no check of advice sent to the salesman then received and entitled loss of business bills not received sales invoice. The flowchart is being the rising of the sales advice is based on the telephone orders irrespective of the party standard and order record of transferring performance risky for the business point of view. Refer to the flow chart and ordering. There is no system of prior credit sanction on the parties. In consequence, they are dispatching the goods of bad credits. There is no stock. There is a special no second copies of sales and advice sent by the dispatch section. They have received by the billing system. Possible dispatches not being successful existing refer to the flowchart dispatch as well billing system. There is no check respect of pricing extension addition of invoice and credit note. This is a result of the loss of revenue, wrong pricing or wrong calculation. It is not clear the supporting documents adequate for authorizing the sales and credit notes. There is a need to be greater cautions. We have in points of weakness of the evidence of the flowcharts and the clear the understanding of the flowcharts and media of evolution. We take it out. Following and exist a proper numerical order of the books. Except the case of salesman order, there is a permanent and a continuous record of order books and forms of order copies and the defined basis of rising sales services. Order book records always keep the complete entering the information about the execution of order and keeps information about the pending orders are related to the moment. The partly executed orders are reviewed by the time to time so that the goods are available. The same can be dispatched to customer. The customer purchase order and related sales advice are matched and kept to go to the customer's file. The sales advice is initiated by the dispatch section, so the token has been satisfied himself about the correctness of entries regarding the quality dispatch and date of dispatch. The record of the actual date of entry is mentioned through the copy of sales invoice bearing the customer acknowledgement have received the goods. Similarly, the records of the outstation deliveries are kept in the copy of forward note and actual sales advice. Documents has been many copies necessary to ensure the proper flow of proper control. There is neither wastage through the necessary copies nor by holding up the inadequate copies. As supporting documents, rising invoice and credit notes, the distribution invoice and credit notes being able to record billing and relevant entries independent of each other. There could be a number of invoices and credit notes being number. There's a flow of crediting auditors never very clear into the interrelationship of the activities and flows. They are integrated from stage to stage. Our auditor has to carefully observe the readability intelligence of the character. The identification of all the individual functions seems the high relevant preparation of flowcharts. The smaller the segment, the better the possibility of quick comparison nature. The auditor should try to keep section and assemble the distinct and identify copies. Reporting the client to internal record weakness. During the course of audit work, the auditor may notice the material weakness in the internal control system. The material weakness defined in the absence of adequate controls of flow, transparency, and increasing possibility of errors, fraudulent in financial statement entity. The case of monthly age-wise analysis of the trade receivable not performed, it is a result of inadequate provision of bad debts and fiscal year under the audit. Auditor should communicate the material weakness to the management audit committee. If on a timely basis, the communicate should be preferable writing through the letter of weakness. Management will be important points in the record in such a letter as are following. Near the letter lists down the areas of weakness of system and offers suggestion of improvement. It should clearly indicate the discuss of one's weakness, which should be attention of auditor as a result of the audit as execution had not been designed to determine the adequacy of internal control of management. The letter serves a valuable reference document of management of the purpose of revision of system and insisting on the strict implementation. The letter may be also serve minimal legal liability in the event of major defection or other laws resulting in the weakness of internal control. It should be appreciated by writing a written letter of management about the weakness of the system. Auditors not observed the study discussed the duty to report the shortcomings of the audit by way of qualification that the defect has been only corrected in the auditor qualification, writing a materiality weakness of the project and consider necessary. The practice is by issue the letter of weakness in the great merit to relieve the auditors from liability in serious cases of fraud and losses of occurrence. They probably would not have taken place as clients taken unit of auditors point letter weakness. In the case of SP Kathy Lawson Limited, 1937 letter, auditor is acquired the charge of negligence of the employee's fraud in view of the fact that he has already informed the client about the unsatisfactory state of the specific area of accounts and has suggested improved that which is not acted upon management. The Council of issued SA 265 communicating deficiency internal control to the charges commandants. In this case, the standard of auditing deals with the auditor's responsibility to communicate the deficiency in the charge of the governance maintaining the deficiencies internal control. The auditor has identified the auditor financial statement. Yes, it does not impose additional responsibility to the auditor regarding the obtaining and understanding of internal control, designing the performance test of controls and above requirement SA 315 and SA 330. Objective auditor to communicate appropriate to those charged with governance and management deficiency in internal control that the auditor has identified during the audit and auditor's professional judgment has the sufficient importance for merit of actions. The auditor shall determine whether the base of the audit work performed, auditor has identified one or more deficiency in internal control. If the auditor has identified one or more deficiency in internal control, the auditor shall determine the basis of audit work performed, whether individually or combined. Revision individually should determine the basis of the compound whether individually combined constitute a significant deficiency. Auditor shall communicate returns significant deficiencies in internal control identifying either during the course or charge of the governance or timely basis. Auditor shall also communicate to the management appropriate level of responsibility and manage in writing significant deficiency in internal control that the auditor has communicated the intended communicate to the charge of the governance unless it has been inappropriate to communicate directly to the management circumstances. Other deficiencies in internal control through in the audit which has not been communicated to the management other parties and auditors professional judgment has the sufficient importance to merit. Auditor shall include the written communication of the significant deficiency in internal control, the description, deficiency, and explanation of potential effect. The sufficient information have enabled the charge of governance and management to understand the context of communication. In particular, auditor shall examine the purpose of auditor was audited to express an opinion on financial statement. Auditor include considering internal control relevant to preparation of financial statement in order to design audit procedures that are appropriate to circumstances, but not the purpose of expressing an opinion in effectiveness of internal control. The manner being reported are limited to the deficiencies that the auditor has identified during the audit. The auditor has concluded sufficient important to merit being reported to those such as accounts. Basis upon the risk of material misstatement identify and assessing the audit, auditor develop SA 330 auditing response to assess the risk, dealing with the auditor responsibility to design and implementation of responses to the risk of material misstatement identified and assessed by the auditor in assessed SA 3 and 5. Objective for auditor accordance with SA 310 is obtain a sufficient appropriate audit evidence about the assessed risk of material misstatement through designing and implementing appropriate response to the risk. SA 330 states the auditor shall design and implement overall responses to address the assessed risk of material misstatement at the financial statement level. Auditor shall design and perform the further audit procedure using the nature, timing, extent of beyond the responses to assess the risk of material misstatement assessment level. In designing the further audit procedure to perform the audit perform, consider necessary that assessment given by the risk material statement and assessment level in the class of transaction, account balance, and disclosure include. Like with material misstatement due to the particular characteristic of relevant class of transaction, account balance, and disclosure include risk. Whether the risk assessment takes accounts of relevant control, that is controlled risk, thereby requires auditors to obtain audit evidence to determine whether the control is operating effective. As the auditor intend to rely on the operating effectiveness of control to determine the nature, timing, extent of substantive procedure, obtain more pervasive audit evidence and higher than the auditor's assessment of risk. Auditor shall determine and perform the test of control to obtain sufficient appropriate audit evidence so that to operate effectiveness to relevant controls. When auditor assessment risk of material misstatement of assessment level includes expected that the controls are operating effectively. Auditor intended to rely on the operating effectiveness to control the determination of nature, timing, extent of procedure, assessment procedure. Substantive procedure alone cannot provide sufficient appropriate audit evidence at the assessment level. In designing in performance tests, performing testing control, auditor shall obtain the perspective audit evidence to character reliance of auditors places On the effectiveness control, irrespective of the assessed risk of material misstatement, auditor shall design and perform respective procedure in the material class of transaction, account balances, and disclosure. See, statutory auditor of listed company and review the internal control of company. It has a review that has a possible saturation by the insurance premiums, keeping insurance policies current in the respective current various year company may be have become due to the payable by the internal control system established by the company may not be able to capture it. Elaborate how they proceed with the deal with the above matter. Framework of internal control. The corporate internal controls are part of governance mechanism that every organization where the company adopts a global internal control framework develop its own management through which is guided to need safeguard the business value. There's a number of global international control framework that provide guidance to entities developing establishment of internal control. The control should be built, established, and processed through which the company pursue objectives. It is flow rather than developing separate six report system. It should be more appropriate to build a yearly warning mechanism in existing management information system. This board of directors and those charged with governance need to consider whether there's enough timely, relevant, reliable reports on progress against the business objectives and significant risk. Objective: the internal control is a fundamental to successful operation, day-to-day running of the business, and it assigns a company in achieving the business objective. It is wider the scope of encompassing controlled incorporation of the strategic governance and management process covering the company's entire range of activities and operation, not limited to directly related financial operation reporting. There are many internal control frameworks. The objective of the chapter is to give an operative common international framework. Guidance note on audit of international financial control over financial system. ICA has issued a guidance note on audit of internal control over the financial reporting, and which covers the aspect of scope of reporting of internal control under the chapter the companies 2013. Essential companies internal control, technical guidance of audit of internal financial control, implementation guidance of audit of internal financial control. The guidance note states that to state whether a set of financial statement presents a true and fair view, it's essential to benchmark and check the financial statement for of compliance with the financial reporting framework. The accounting standards specified in Companies Act 1956, which are deemed to be applicable section 133 of the Companies Act, relates to the Rule 7 Companies Rule. One of the criteria constitutes that a financial reporting framework based on the company's preparing present financial statement against auditors evaluate the financial statement, the fair and true value, state the affairs and operations of the company, and the audit of financial statement carried out by the Companies Act 2013. Similar, the benchmark of internal control based on the specialized criteria essential to enable the management of the auditor to assess the state of adequacy and compliance with the system of internal control in the Indian context. Students are advised function of internal control Companies Act 2013, assessing identifying risk of material misstatement through understanding entities environment, providing necessary criteria to internal financial control over financial reporting companies. Internal control framework. The overview of different internal control frameworks followed internationally. The internal control integrated framework is issued by the Competence and Sponsoring Organization of a Tradeway Commission (COSO) framework. The COSO internal framework integrated framework incorporated 1992 guidance how they establish better control to the companies to achieve the objective. COSO categorize the entity level objective to operation financial reporting compliance. The framework includes more than 17 basic principles represent financial concept of assessing the 5 components. Environmental control risk. First on the control environment risk, control environment risk assessment, control activity, information communication and monitoring. Some of the basic principles, the key elements of compliance such as integrity, ethical value, authority, responsibility, policy procedures, and financial efficiencies. However, the framework clarifies the requirement of effective internal control. This is largely done by articulating 17 principles is relevant to every entity must be present and function in order to have effective control of internal control. Here is a write of the 17 internal control principle, internal control components of the CISO framework. Control environment, risk assessment, control activities, information and monitoring. Control environment, demonstration commitment to the integrity of ethical value, exercising oversight of responsibility, establishing structure, authority and responsibility, demonstrating commitment to competence, enforcing accountability. Risk assessment, specifying suitable objective. Risk assessment, identifying and assessing risk. Risk assessment, assessing the fraud risk. Risk assessment, identifying and analyzing significant risk. Control activity, select and develop control activity. Control activity, select and develop general controls over technology. Control activity, develop, deploying through policies, procedures. Information and communication, user relevant information, communication internally and communication externally. Monitoring, conducts ongoing and separate evaluation and evaluation of communication efficiency. Costco framework is designed to be used by the organization to assess the effectiveness of the system of internal control to achieve an objective to determine the management. The framework itself, the three categories of objectives: operation objective, reporting objective, and compliance objective. Operation objective relating to the effectiveness and efficiency of the entity's operation, including operational, financial, performance goals, and safeguard of assets against losses. Reporting objectives related to the internal and external, financial, non-financial reporting of stakeholder, which encompass reliability, timeliness, transparency, other terms of establishing regulator standard hurdles and entities policies. Complaints objective in the framework. Complaints objectives are determined as related to the entity's complaints with the applicable laws and regulation. The framework considers the increasing demands and complaints of laws and regulation accounting standards. A limitation of internal control. The framework acknowledges that a limitation relating to systems internal control, for example, certain events and conditions are beyond organization control. No system of internal controls always to do what is designed to do. Controls are performed by people and subject to human error. Uncertainty, incoherence of judgment, management, operate, and incomprehension due to collusion. And efficient system of internal control recognizing inherent limitation and addressing the way of minimizing the risk of its implementation. Conducting system internal control. However, the effective system is eliminate the risk. The effective system is to inherent control provides a reasonable assurance, not absolute assurance, reasonable assurance. This is the entity will achieve a defined operation. Reporting and complaints objective. Guidance for assisted control. Publishing in Canadian Institute of Chartered Accountants. COCOs introduce the objective of improving organization performance and decision making in a better control, risk control management, or corporate governance. The criteria of control. COCO. This is a framework is developed by the Canadian Institute of Chartered Accountant with the objective to improving the organization performance and decision making, better control, risk management, and corporate governance. The framework into 20 criteria. Effective control is a 4 area of control: purpose, direction, commitment, identify and values, capabilities, governance, monitoring and learning, evolution. This framework emphasizes the control involved the entire organization, beginning of individual level to the employee. The COCO framework outlines the criteria of effective control of following 4 areas: purpose, commitment, capability, monitoring and learning. In order to assess whether the control exists in operating efficiently, each criteria should be examined, identify the control that plays and address. Control objective of information related technology, COBIT. COBIT stands for Control Objective of Information Related Technology. Is a framework created by ISACA, Institute of System Audit and Control Assessment. IT governance and management. COBIT has a 34 level process. This is about 1 to 10 control objectives categorized into 4 domains: planning of organization, acquisition and implementation, delivering and support, and monitoring and evaluation. It is designed and supporting tool for managers and allowing bridges to crucial gap between the technical issues and business controls and control requirement. Business managers equipment a model to deliver value to the organization and practice better business management practices associated with the IT process and control. That is a guarantee the integrity of information system. Today, COPIT is global. All the managers are possible for IT business process. It is throughout the recognized guidelines that is used to apply any organization across individual. Overall, CVIT ensure quality, control, reliability, and information systems and organization. This is also most important aspect of every modern business. The framework guidance organization to how to use IT resources, application information, infrastructure, people to manage IT domains and process and activities to respond to the business requirement, which is including compliance, effectiveness, efficiency, confidentiality, integrity, availability, reliability. Well-governed IT practices assign business to comply with the laws and regulations and contracts agreement. Internal control. The guidance of directors of the combined code published by the Institute of Chartered Accountants of England and Wales, known as an Turnbull report. When the combined code of commitment corporate governance code is published, the Institute of Accountant of Eagles and Wales agreed to the London Stock Exchange. It will provide some guidance to assess the listed company and implement the requirement of code related to internal control. These key principles of code are indicated as below. The board would maintain a sound system of internal control to safeguard shareholders and industries and companies. Directors which will least annual conduct a review of effectiveness of group system. Internal control should report on shareholders that they have done so, and review should cover all the control including financial, operation, compliance, control and risk management. These companies which do not have internal audit function would time to time review the need to know. The guidance requires directors to exercise judgment, reviewing how the company is implementing requirement of code relating to the internal control and reporting to the shareholder. That this guidance is based on adaptation of company's board and risk-based approach to establish a sound system internal control and review its effectiveness. It should be incorporated by the company within the normal management governance process. It should be not be treated as a separate exercising undertaken by the meet regulatory requirement. Sarbanes-Oxley Section 404. Section 404 of the Sarbanes-Oxley Act. Sarbanes-Oxley Act 404. The United States of America mandates that all publicly traded company must establish internal audits and purpose of the financial law report and must document, test, and maintain the control and procedure to ensure that effectiveness. The purpose of SOX to reduce the possibility of corporate fraud by increasing the stringent procedures and requirement of financial reporting. Sarbanes-Oxley Act has revalued federal regulations pertaining to the public traded companies in corporate governance and reporting obligation. It is follow of the constitution of PCAOB, Public Company Accounts and Oversight Board, which regulates the audits of public companies and SEC registered brokers and dealers with order to protect the investors and further public interest on preparation information, accuracy and information independent audit report. SEC rules the PCAOB standard requires the manager and perform formal assessment in the control over financial reporting, including tests to confirm the design and operating effectiveness of the control. The management should the annual report of assessment and ICFR. The external auditor provide two options, that is a single integrated auditor company, independent opinion of effective of the ICFR, traditional opinion of financial statement. Case study. Understand the concept of the analytical example, cost studies, gain knowledge about the various practices situation of auditor while performing the such procedure. So I'm happy like audit evidence, SA 500 audit evidence, SA 500 audit evidence, specific consideration for selected items, specific consideration for selected items, SA 500 external confirmation, SA 5 initial audit engagement, opening balances, SA 530 audit sampling, SA 50 related parties. SA 5 related party, SA 530 audit documents as initial audit engagement, opening branch, SA 500 external confirmation, SA 5 audit and specific consideration for selected items, audit evidence. These essay see Karthik is an intrinsic effective, has an inherent dislike to watching, wasting time and free use to things. He wants to do everything perfect and specific and spam and cost efficient manner. Adopting the same approach he goes a professional work as auditor is a very particular in completing the work and quickly in the time bound manner. During the audit of company's account, he chose to select some specific items like test of controls according to this judgment, like he decided to verify a sales transaction above the threshold limit of 25 lakhs and fresh addition property plant equipment above the threshold of some of the amount and selected by him. Retail verification. He also grew the suspicion about the sales transaction engage 50 lakhs. Such transactions are fag end of the year and goods moves out of the company's premises with purposely sent through the non-monetized conveyed without accommodating EV bills to a single customer. Even the span of few days, he doesn't agree to send external confirmation request to the customer. Besides, he decided to go through the related party transaction in the detailed manner without expecting the dig on the material statement. Litigation claims involves companies are suggesting that primarily a Brown attack, Brown area where the detailed examination of another order in a testing approach he would be efficient, cost efficient, obtaining audit evidence. Can you approach following auditors to constitute an audit sampling which does not slightly give kind of risk which approach in required audit? As a testing approach is obtain audit evidence relating to selective examination specific items. There's a class of transaction and account balance while selective examination specific text. A test means obtaining audit evidence which is effectively way of obtaining audit evidence. It does not constitute audit sampling. The result of audit procedures to items selected BF cannot project to the entire population. The selective examination specific item does not provide audit evidence considering the remaining of the population. Such approach is a non-sampling risk. It is a risk auditor reaching erroneous conclusion due to inappropriate audit procedure, misinterpretation of audit evidence with failure to recognize a misstatement or a deviation, whereas audit sampling refers to the application of audit procedures less than 100% of the item within the population that are relevant under the audit. Such as all these links of population have been equal chance of selection. Using the The subject of a sampling risk. A testing on basis of sample may be leads to erroneous conclusion is due to the risk of auditor's conclusion based on the sample may be differ from the conclusion. Entry purpose is subject to some audit procedure such as the risk of always of audit sampling. SA 500 audit evidence. SA 500 deals with auditor's responsibility to design and perform audit procedure to obtain sufficient appropriate audit evidence to be able to draw a reasonable conclusion on which the auditor opinion. It is also examine the constitute of audit evidence and audit financial statement. Audit evidence is the information used by the auditor in arriving at the conclusion on which auditor opinion is based. Audit evidence include both information containing accounting records, underlying financial statement, and other information. SA 500 audit evidence. Scope of SA 100. The SA deals with the auditor's responsibility to design the performing procedure to obtain sufficient appropriate audit evidence to be able to draw a reasonable conclusion on the basis of audit opinion. SA is applicable to all the audit evidence obtained during the course of audit. Objective of auditor to design and perform audit procedure in a way to enable the auditor to obtain sufficient appropriate audit evidence by being able to draw a reasonable conclusion on which basis of auditor opinion. Information to be used in audit evidence. Auditor shall consider the relevance and reliability of information to use the audit evidence. Using the information when the information is from the management expert is used, auditor shall evaluate the compliance, objectivity, experts, appropriateness expert work. When the using the information produced by the entity, auditor shall evaluate the reliability, compliance, accuracy of information. Audit procedure to obtain audit evidence. Audit evidence draw reasonable conclusion on which piece of auditor's opinions obtain performance. Risk assessment procedure. Further audit procedure comprise of test of controls and substantial procedures. Inconsistency or doubt over the reliability of auditor evidence. Auditor shall determine what modification or addition to the audit procedure are necessary to resolve the matter and shall consider the effect of matters in any other aspect of the audit evidence. During the course of audit, TK Home Private Limited recognized export house engaged in manufacture of T-shirt under the brand TKC Tripti is verifying the export revenue of the company. She has verified transaction export sale account maintained the account is outer relevant export invoice. The export sales are being payment of IGST which are refunded is automatically audited in the accounts of the companies after submission. On inquiring of the internal audit staff regarding the export revenue, she told that export sales are recognized for the year on basis of say a bill of lading. However, she is not convinced that the response of feel the same does not appear to be proper. She found that the 3 export invoice bearing date March has been valid 75 lakhs have not recognized export revenue on the ground. The bill of lading of this invoices are issued on the month of April. Discuss the source and obtain reliable audit evidences in the regarding how can she challenge the management assertion and the completeness of the export revenue of this SA220. SA210 audit evidence specific consideration for selected items. SA10 the audit deals with specific consideration for the auditor to obtain sufficient audit evidence with the specific to inventory, litigations and claims and segments in information of audit of information. Objective of auditor the audit to obtain sufficient appropriate audit evidence, excising and condition of inventory, completion and litigations, and claim involved entity, presentation of disclosure, segment information in accordance with the application EFR financial reporting. Inventory. If the inventory is material, obtain audit evidence existing with the condition and inventory by attendance of physical inventory counting, performing audit procedures over the entities. If the inventory counting conducted by the date other than the audit of describing financial statement, perform additional procedure with respect to the inventory between the count date and date of financial statement. If auditor is unable to attend the physical inventory counting due to the unforeseen circumstances, auditors make observation physical count and altering the date and perform the audit procedure on the intervention transaction. If attendance at the inventory count is impracticable, auditors to perform alteration procedure. If it is not possible, it is to so modify the opinion. When the inventory is under the custody of third party, requires confirming the third party and perform the inspection and procedure. A litigation claim. Auditors perform audit procedure to identify the litigation claims, inquiry of the management, review the minutes of the meeting, review the legal expense account. If the auditor assesses the risk of material misstatement, seek direct communication with the entity's legal counsel. Auditors unable to communicate with external legal counsel, modify or opinion say 705. Obtain written presentation all no actual possible litigation claim has been disclosed in the auditors and appropriate for counting as per financial report. Segment reporting. Auditors obtain audit evidence regarding the presentation disclosed to the segment and within the financial reporting framework. Understand the method used by the management to determine segment information and presentation analytical procedure. SA 51 deals with specific consideration of the auditor to obtain sufficient appropriate audit evidence with respect of the certain aspect, inventory, litigation, claims involves entity, segment information as audit of financial statement. See, but then the plant observe the physical count of the inventory of the plant of company for in the remote area and stage of the record as part of the statutory audit expenditure and closing 31st March. He's already informed the management of the intention to reach the plant site by evening 29. He plans to inspect the inventory, observe the counting process, and perform a text count among the management has made all necessary arrangement to facilitate the above expertise. However, the agitation of the Himalayan hills as a 28 March as a promulgation of strict law regarding the conversion of agricultural land of commercial use. Many civil society groups are participating in the agitation. Many HFs leading the plant side block the proceedings. The plant is not accessible through the other mode, and the blockage lifted by 1 month after the state government announcing the formal commitment to look into proceedings. Hence, this case, island situation impractical returns inventory. Counting as a specific consideration. How should audit process a specific situation? On reviewing the legal expenses of the notice CA Sukanya, auditor of the company finds that legal fees of 10,000 is paid to B. George, reputed lawyer during the year 2012-13. On inquiry of the management regarding the purpose of the expenditure, evasion reply was received from the management stating that lot of work is performed by some lawyer on behalf of the company and no specific details are provided. So she finds the proper to corresponding direct to the lawyer. She obtains the answer as an email to lawyer for the professional service bill. She shot off the inquiry letter asking for the nature and status of litigation claims and against the company as a letter. In what is her approach proper irrespective of the matter of approach followed by her in what she liked to achieve the corresponding lawyer company. On going to the financial statement according to TES during the course of the statutory audit, TEA Thanmaya finds substantial inventory in the company consisting of mass, light poles, remains of super industry, certain finishing goods. Finishing working. While planning the audit procedure, he has planned about seeking information about super industry regarding the existence and conditions of the mass light poles belonging to TS lying in the 31st March. However, the purpose of super industries were raised by DGG, official Director General, and GST authority connection with the busting of fake bill scam. The proprietor of the firm was arrested for November and came out of the bail in March, and she detailed the proprietor of the firm was flashed prominently local newspaper and scientists where the company is located. The same then also belong to the same place. Discuss how she proceeded the rest of the matter with the auditor. Yes. Extra I say fine not for extra confirmation. Extra confirmation scope of the audit, objective of the auditor scope. The SA deals with auditors use external confirmation response to obtain audit evidence. Objective: design and perform external confirmation procedures to be up to obtain relevant and reliable audit evidence. External confirmation procedure: determine the information to be confirmed or requested. Select the appropriate confirming party. Design the confirmation request. Send to the consenting the request, including follow-up request. The management refused to allow the audit to send confirmation request. In inquiry to the master management to listen for the refusal. Seek audit evidence as it is validity is a reasonableness. Evaluate the implication of the management refusal on the auditor assessment of the relevant risk and material misstatement, including risk of fraud and the nature, timing, extent of other audit procedure. Perform the alternative for audit procedures designed to obtain relevant and reliable audit evidence. If the management refused to unreasonable to communicate with the TCWA and consider the implication of audit and auditor's opinion. Result of external confirmation procedure: reliability of response to confirmation request. If the auditor has doubt about reliability of response, auditor to obtain further audit evidence. If the auditor determines a response not reliable, auditors evaluate the implication of assessment of risk material statement. No response, auditor shall perform the alternative audit procedure. When the response is positively, confirmation necessary and seems not received. Determine the implication of the audit and auditors. Exception: auditor shall investigation to determine whether or not the incentive is simply misstated. Negative confirmation: auditor to use negative confirmation as a sole responsive audit procedure. Then assessing the risk of material misstatement as a low for relevant effective control. The population comprises of large number of small homogeneous transactions where very slow exception rate is expected. Auditor is not aware of circumstances that may cause recipient to negative confirmation request to discuss the request. SA 505 deals with the auditor's use of external confirmation procedure to obtain audit evidence in accordance with the records of SA 500. It is intended to assist the auditor in designing and performing external confirmation procedure to obtain relevant reliability audit evidence. As you knowledge, auditor Groom Limited have sent positive information to 30 auditors. Company might all auditors of the informed sectors and smart. You choose it send positive information letters to all the above parties of this bad business, address stating the respective bills and discuss the CFO company. CFO corporate and does not raise any hassle to the matter. As it says, as a responding to the circumstances received by the week time, he is glad informed that about 30 creditors GST registration 20 concern has been cancelled during the financial year itself is collected information on GST portal. He further informed you there is no fresh registration pertaining to PAN and the parties. How will you proceed to deal with the division of the audit of the auditor of the company? SA item initial audit engagement opening balance. SA item initial audit engagement opening balance. Scope of standard auditing. Standard auditing deals with auditor responsibility relating to opening balances and when the conducting an initial audit engagement. Objective of an auditor to may obtain sufficient uploaded audit evidence. The opening balance contain misstatement that is materially affect the current balance of an statement. The appropriate accounting policies are consistently applied and or changes where has been properly accounted for present in disclosure. Audit procedure opening balance auditor shall read the most recent financial statement and proceed to predecessor auditor's report, determine whether the prior period of closing balance has been correctly brought forward, determine whether the opening balance reflects the appropriate accounting policy, perform the audit procedures on opening balance. If current period financial statements are misleading due to the misstatement in opening balance, communicate to the management with the CWA. Consistency in accounting policy. Obtain audit evidence as to whether the accounting policy is consistent applied in the case of change and whether the proper accounted for present and disclosure. Relevant information and predecessor auditor report. If modification in the predecessor auditor report, evaluate the effect of such matter, give the rise to such modification, respect of the current period financial statement. Auditor conclusion reporting. Open balance. If an audit is unable to obtain the audit sufficient regarding open balance and qualified disclaimer opinion, the auditor concludes the opening balance contains a misstatement, not properly present or disclose qualified adverse opinion, inconsistency in accounting policy. If the auditor concludes that accounting policies are not consistently applied in relating to the opening balance or changes are not properly accounted for, qualified adverse opinion to be given. Modification in the opinion in the predecessor audit report. If the predecessor is relevant and the material to the current period financial statement, auditor shall modify the current period audit report. Yes, if item deals with the auditor's responsibility relating to opening balance when conducting an initial audit engagement. An internal audit engagement is an engagement in which either the financial statement or the prior period is not audited or audited in preceding auditor. Yes, E. Hossain is appointed, C. Muthukumar is appointed as auditor of the firm in 2023, 31st March. The accounts of the firms is unaudited in the financial year. Previously, the company has a material inventory reflect the financial statement even on the closing 31st March. He performed the audit procedure including attending physical inventory counts on 31st March. However, there is an creating doubt of mind regarding opening inventory reflecting the financial statement. Thus, it exists in response to the past situation. I say 530 audit sampling. I say 530 deals with the auditors using statistical, non-statistical sample designing and selecting audit sampling. Perform the test of controls and test of details. Evaluate the risk of sample. SA 3 CSA Muthukumar has drawn some samples during the course of audit. Manufacturing company testing the control as well as test our details. One of the basis of the sample selected, he reaches the erroneous conclusion that access controls on applications are less effective. Further, the basis of sample selected, he concluded erroneous the working flow progress inventory amount 5 crores and financial statements are made misstated. Outlining the above risk involved is discuss how is going to be effective the audit of the company. SA 530 audit sampling. Now, scope of the standard of auditing, objective of auditor. Scope: the standard of auditing applies when the auditor has decided to use audit sampling in performing audit procedure. It is deal with the auditor's use of statistical, non-statistical sampling. Objective: to provide a reasonable basis for the auditors to draw a conclusion about the population about the sample selected. Reason Sample design, sample and selection types of listing. While designing an audit sample, auditor shall consider the purpose of the audit procedure and characteristic of the population. The auditor shall determine the sample size efficient to the reduce the sample risk, sampling risk appropriate to a level. The auditor shall select the items of the sample such as each sample unit population has the same sampling. Performance of the audit procedure. The auditor shall perform the appropriate audit procedures and each item selected. If the audit procedure is not applicable on selected items, apply the procedure on replacement team. If the auditor is unable to apply design and audit procedure to selected items, thread that item as an deviation from the program prescribed control. In the case of test of control, as a misstatement in the case of test of details. Other points of consideration. Auditor shall investigate the nature, cause of deviation of misstatement, identify and evaluate the possible effect. When the deviation misstatement consider an anomaly, the auditor shall perform the audit procedure to obtain high degree of certainty that it does not represent a population. Test of auditor shall project misstatement found in the sample to population. Auditor shall evaluate the result of a sample and whether to use audit sampling as provide reasonable basis of conclusion about population tested. SA 550 related parties. SA 550 related parties. Scope of audit related parties. SA standard of deals with auditors responsible relating to related party. Relationship as a transaction is on expected how SA 315 assessment risk assessment, SA 330, SA 240 and relation to the related party, relation to the transaction. Objective of auditor to obtain the consideration of related party transaction, recognize the fraud factors arising from the transaction, conclude the financial statement is so far as they are affected by way of transaction, achieve a true and fair presentation or and the financial statements are not misleading, to obtain audit evidence as to whether the related party transactions are properly informed, accounted for and disclosed in the financial statement. Requirement of annual auditing. The risk assessment procedures are related activities, understand the entities, a related party, relationship, and transactions. Maintain the alertness of a related party transaction information when reviewing the records of documents. Sharing related party information with the engagement team. Identification and assessment of risk of material misstatement associated with the related party transaction relationship. Responses to the risk of material misstatement associated with the related party relationships and transactions. Identification of previously undefined or disclosure related parties. Auditor shall examine whether the underlying circumstances confirm the existence of the transaction and communicate with the team. I request the management to identify the transaction with the newly identified related party transaction and perform more substantive procedure. Reconsider the risk of request for the related parties. If a non-disclosure by the management appears intention, evaluate the implication of the audit. Identification of significant related party transaction outside the entity of normal course of business. Inspect the underlying contracts and evaluate to the business rationale of a transaction, whether the terms of transactions are consistent with the management explanation, whether such transactions have been properly accounted. Obtain audit evidence that the transaction has been appropriately authorized and approved. Other important points. Auditor shall obtain written representation that all the related parties and related party transactions have been disclosed by to the auditor. Now, all such transactions have been properly accounted for the disclosure. Communication with those of the governance. Auditor shall communicate with the source of governance. Significant matter arises in the audit in connection with the entity's disclosure. Documentation. Auditor shall include the audited documentation naming the related parties and the nature of the related party transaction. SA 550 deals with audit responsibility to related party transaction performed in the audit of financial statement, specifically implying the relation to risk of material misstatement associated with the related party relationship and transaction. Data control. Living Ware Private Limited is engaged in manufacture and export of floor covers. Such products and labor intensive do not require much capital investment in machinery. These companies have no plan in diversifying other product line. Its director also holding significant interest in other company, My Living Private Limited, engaged in the manufacture of blanket using capital intensive machinery. During the course of the audit, Mr. Living Private Limited is noticed and knew that your company has sold 1 crore or rupees 1 crore of living well private limited during the transactions are done the normal market rates applicable to use the machinery. How do you view the above transaction by My Living Private Limited? Case study. Case study. Honor Specialized Chemical Private Limited, 1,000 crores turnover company, has a plant in Kope, Maha, Ankaleshwara, and manufactures various products of fertilizer unit, cosmetics, and paint industry. The company has built a good reputation. Apart from the domestic market, is the export to export Europe market and Middle East. The company is closely held companies owned by three friends of family members. Type of material handled producing hazardous. Following further latest information related to the company are: company need to import the key raw material exported to high risk of price fluctuation and currency risk. Company carries high inventory during the long import cycle and seasonal sales pattern. The company capitals almost 60% blocked in inventory and rest of receivables. Company has huge investment in plant and machinery financed through the terms known as financial industries. Since the company has a large imports, it buy import license from open market. The company has received customs notice about the fake license of importing material without paying duties. Company has filed an appeal against that notice and same is returning to the appearance tribunal. And the amount involved in the material along with the interest and penalty is more than 10%. Company has a liquid chemical stored in huge tanks. A powdered form of chemicals are stored in the Azoda store standard sized drums. The few items and block like coal, sulfurs are lying in the open area. Company has huge domestic sales in consignment basis and a vast quantity of finished inventories lying in the consigning across India. The company has received order of NGT to pay fine of 1.5 crores for emission of toxic chemicals in air and water. Company has filed appeal against the orders. The type of the plant suggests it has been continuous process. At the time, huge quantities of materials are in process. Raw materials stored in a huge tank located 2 kilometers from the plant, and the transport of chemicals as a network pipeline connected them. As at the point of time, there are huge quantity of material lying in the pipeline. The company has proposed its inventory details involving management expert during this. Completion review. After studying chapter, you will be able to reference about the knowledge and procedure relating to completion review. Glance of the relevant essay 560, 570, 580, picture article and gain applicable gain knowledge about hand of writing. Understand the concept of the use of analytical procedure, examples and health studies. Gain knowledge about the varied practices in within the auditors while performing these procedures. Completion review, SA 560, subsequent event, SA 570, going concern, SA 5 return representation. CA Muthukumar is an auditor of a company engaged in the manufacture of energy saving electric lights. As an auditor of the company, he already knows that the devastation fire has been taken place in the plant of the company during the year ago, and the entire his plant system machinery is investigation later. Estimate the loss of the company assessed over a tone of 50 crores. The company has lodged the complaint with the insurance, but there are no progress about its claim settlement from till the close of the year. Company operates has been shut down since then. The company has a little money to reinvest in the fresh after more. The promoters put certain personal properties for sale. However, due to the struggling real estate market, no deals are fluctuated. Meanwhile, the customer of the company started procuring these requirement of supplies. An audit of the company, she is a predecessor. Main question troubling is relating to the ability to company to restart its operations or commences are continue to going concern. She had complete audit within the timeliness. She has keep the fingers crossed and adopt the wait and watch policy considering the impact of development regarding his client settlement. There's still 4 months left. She can wait. Suddenly one day she come up in the forensic lab conducting examination of samples taken from the fireside and the adverse report casting a round on the genuineness of the client itself. All hopes of the recovered losses being dashed. Managers provided that a future plan of action is a restate the business. She has also provided the cash flow forecast for coming period. However, she is not convinced regarding the export cash flow. She was the prime facie view of the company was not going to withstand the huge loss in the absence of claim money, and the claims was too rosy and impracticable. Negative forensic lab report changed the whole situation. However, the deeper security of the company finding the forensic lab appeared to be contradictory. Management found the gaping loopholes and said report company was earning good margin and paying the handsome taxes. It is an expansion mode. The demand was a product was also rapidly growing. In such a situation, why would you take such a criminal steps? Management decided to take the head on. While performing audit procedure, she checked up any updates or claim. It became known to her the manager of the company has challenged the forensic lab report for given the point wise reputable with answer. Even the officers of the insurance companies are not able to digest the forensic lab report, as the management provides some videographic and digital evidence of forensic lab and the left faded face. It seems extraneous consideration had been prevailed for the course of submission of this report. The insurance company asked the forensic lab to consider this finding the light of the company submission. A positive revised report was submitted by the lab to the insurance company, and the doors has opened for settlement of the claim and resolution of the claim was in sight. The performance of audit procedure recording the subsequent events helped them to identify the conditions and they either mitigate or otherwise affect the company's ability to continue going concern. Since he was particular about the performing procedure regarding the subsequent events, he was able to identify the mitigating factors affecting the uncertainty accordance with the outcomes of the claim. It is the development, and he should convince himself about the ability to continue going concern. After performing the substantive procedure, consider the procedures to still be performed by the auditors before the audit report is issued. Some of the important proceedings dealing with the effect of subsequent event. After a sufficient appropriate audit evidence using the going concern assumption by the management of obtained return representation. Subsequent event. SA 560 subsequent events. Scope of the essay. Definition. Objective of audit events occurring after the date of financial statement. The fact becomes known to auditors after the date of financial report but before the date of financial statement. Facts that became known to the auditor after the financial statement. Subsequent scope of standard of audit. Standard of auditing deals with the auditors' responses to the related to subsequent events in the audit of financial statement. Or definition. Subsequent events. The events occurring between the date of financial statement and the date of auditor report. The fact that became to auditor after the date of auditor reports. Objective of auditors. Obtain sufficient appropriate audit evidence about whether the events occurring between the date of financial statement and the date of auditor report that require adjustment or of disclosure in the financial statements are appropriately reflected in those financial statements. Respond appropriately in the fact become known auditor after the date of auditor's report that they have been knowing the auditor for of the date they have caused auditor to amend the auditor's report. Event occurring between the date of financial statement and date of auditor report. Auditor shall perform the audit procedure to ensure that all the events has been identified. Auditor shall consider that auditor's risk assessment is to determine the nature and extent of such procedure. If such identify event such identify, determining whether such event is appropriately reflected in financial statement. Obtain written representation that all the event has been adjusted or disclosed. Key facts which known to the auditor after the date of auditor report but before the date of financial statement. Discuss the matter with management or those target the government. Determine whether financial statements need to be amended. Inquire how the management intend to address the matter in financial statement. Management amends the financial statements. Auditor should extend the audit procedure and either amend the audit report to include additional date for restriction to the amendment or provide a new amendment report including the statement of emphasis of meta para other meta para. If the manager doesn't amend the financial statement, the auditor report not to be provided to the management modify the opinion. If the audit report has already been provided to the management, notify those charged with government not to issue to the third parties. If still issued, then take appropriate action to prevent the reliance on the auditor's report. Fact that becomes known to the auditors after the financial statement has been issued. Discuss the matter with those on management and determine whether the financial statements are need to be amended. Inquire how the management intend to address the matters of financial statement. Review the management has taken steps to inform about the situation and anyone received receipt of previously issued financial statement. Its step taken issue a new amendment report, emphasis of matter report, other matter. If steps not taken, then takes appropriate step to prevent the reliance of audit report. SA 560 deals with auditor's responsibility related to subsequent events in the audit of financial statement. Objective auditors to relating to the audit obtain sufficient appropriate audit evidence whether such events are appropriately adjusted or disclosed in financial statement. Further, in some cases of fact that comes to knowledge after the date of auditor's report, respond to those facts as that they have been known to him on the date of the report as they caused him such amendment. Fast-moving limited engaging manufacturer of shoes and slipper located in location in Haryana due to the unpredicted rain in the area of month September. Many areas of the town has been inundated due to the choking of sewer system. As a result of the above, the company premises located in the town has been affected. Result of damage of stocks. Company has lodged their claim with the insurance company of 1 crore, and the same has been the same receivable 31st March and not settled yet. The insurance surveyor appointed the same submitted the report to the insurance company recommending that 45 lakhs as but what was. Company was also given the consent of same and settled the amount 45 lakhs transferred to the bank account on 15th May. You have to finish the performance substantive procedure company 31st March and the response to the cost amount auditors to the company and above situation. Test of understanding. He is auditor of the company. He is missed of conducting an audit to say company financial statement at the meeting of the board of directors held the 31st April. 1 crore is proposed to be equity of one dividend of 1 crore is proposed. The equity share of 10 per share. And in this proposal, a good chance of being approved by the AG of the company to be the few months. Hence, the audit procedure is near completion. It is contemplation finalizing the audit report 31st June. Is this responsibility thrust upon him the auditors of the company? Going concern. Yeah, going concern. The scope of auditing, the responsibility to the management, responsibility. Going concern. SA standard audit deals with the auditors, the responsibility of the auditor's financial statement, relying on going concern, the implication of the auditor's report, the responsibility of the management to make the specific assessment to the entity's ability to continue the going concern. It makes appropriate disclosure in connection with the going concern financial statement. Responsibility of auditor to obtain sufficient appropriate audit evidence and conclude that appropriateness of management use a going concern to assess whether the material uncertainty exists about the entity's ability to continue a going concern. However, the auditor cannot be expected to guarantee the entity's ability to continue as a going concern. Whether conditions or events are identified, requesting the management to make the assessment necessary to the entity's ability to continue as a going concern, evaluating the management plan of future costs, assessing analyzing the cash flow forecasting management, consider additional fact and information available, requesting written representation of the management considering the plans of future action, feasibility of the plan. Implication of the auditor's report. Using the going concern basis of audit complaint, auditor should express an adverse opinion. Using going concern being accounting appropriate but material uncertainty exists and inadequate disclosure of material uncertainty is made in the statement. Unmodified opinion and material section of material uncertainty is linking to going concern. Management unwilling to make or extend assessment, auditors shall consider the implication of auditor. Using going concern, the basis of accounting is appropriate, but the material uncertainty exists, and the adequate disclosure of material uncertainty is not to be not in a financial statement. Qualify adverse opinion, mention the basis of opinion paragraph. Other important points to be considered: the auditor shall communicate with those charged with the governance, even that condition that may cause significant doubt the entity's ability to continue going concern. If there's a delay in approval of financial statement, then auditor believes such a delay can be related to the events then condition related to going concern assessment or audit to perform the additional procedure as well as consider the effect of audit conclusion. SA 570 going concern deals with auditor's responsibility in audit of financial statement, relating to going concern the implication of auditor's report. Auditor's responsibility to obtain sufficient appropriate audit evidence regarding this going concern basis on the accounting of preparation, presentation of financial statement on the basic definition obtained. The inclusion of material uncertainty exists in the relation to the events and condition to may be significant doubt in the entity's ability to concern. CM was the auditor of the company engaged in rearing of poultry boards and obtaining eggs. Therefore, company has performed well in the corporation certainly. Sales has grow and company is expanding the market in native northern state of promoting the fraud flu and eastern part of the country. Hence, in last year, company's fortunes have mostly wise fact due to the pandemic and due to the recurrent outbreak of bird flu since 2 years, company sales are dropped to 50 crores, 10 crores. Hence, the majority part of the livelihood is wiped away from bird flu. She is not optimized about the going concern about the management. Management now wants to start the new branch of birds. This early working capital facility company going to bank for the construction support of business. He was informed that the repayment structures of working capital of term loans began from ensuring here. No fresh credit facility has been granted by the company. Bank to the company. Companies also plan to further longer credit from the animal feed supplier. Company loan bans to take additional measures to prevent the safeguard of livestock, including aggressive vaccination, preventing health checkups, and more frequently use of veterinary tracker. As villages or surrounded areas have accused the company for spreading air pollution. Managers prepare a cash flow forecasting examination, discuss the approach of the going concern assumption, keeping a view of the above reflecting cash flow forecasting. See, Muthukumar finds that financial ratio of a company, current ratio, inventory turnover ratio, trade receivable ratios are in the rate and hand return considering compared last year. Company also not able to pay its credit at time. The company subsequent time again the bank has grant additional credit facility, but company is not listening. Therefore, has been significant losses the company due to the lack of response by the company's product on the market. As a result of many companies sold its product sold in below cost price. And there has been says situations where the company is not able to pay salaries of staff at time, and this negative funding have led to the conclude using going on the basis of the accounting and top applicant. He brings the matter to knowledge of CEO of the company. This reporting duly caused the scenario. CFO informed the management to ready the issues of disclosure of the operation of the going concern assumption accordingly. How should it impact the auditor's opinion? The management itself disclose inappropriate going concern assumption and according to SA 580 return representation. The written representation deals with the auditor's responsibility to obtain written representation from the management and appropriate those charged with the governance. Although written representation provide necessary audit evidence and they do not provide sufficient appropriate audit evidence as a whole of other any other matter as may be deal. Further, the fact of the early audit and this fact of management provide then reliance of written representation does not affect the nature extent of audit evidence audited obtained from the fulfillment of manager responsibilities and specific assertion. Written representation scope of audit. That's SA deals with the auditor's responsibility to obtain written representation from the management and the appropriate to charge with governance. Objective of the auditor to obtain written representation from the management those charged with governance. They believe that they have filled their responsibility for the financial statement and for completing information provided to the auditor to support other audit evidence relevant to the audit financial statement and specific association in the financial statement or mean to return representation to respond appropriately to the return representation provided by the management. Return representation audit evidence. Although the return representation provide necessary audit evidence, they do not provide sufficient appropriate audit evidence on their own. Date and period covered by the return representation. Date of the return representation shall be near to the particular to, but not after the auditor's report or the financial statement. Return representation shall be the financial statement and period referred to the auditor's report. Important point to be considered. Doubts as to reliability of written representation. If the written representation are inconsistent with the audit evidence, auditor shall perform the audit procedures to resolve the matter. If the auditor concludes that written representation are not reliable, auditor shall take appropriate action to appropriately necessary the audit. Request and written representation are provided. Auditor shall discuss with the management, re-evaluate the integrity of the management, takes appropriate action, including the impact of audit report on SA 705. Following are the written representation of various limited started limited CSK associates the audit application point to be anonymous written representation below. Date representing the letter providing connection with the audit of financial statement allow this company 31st month purpose of expressing opinion to whether the financial statement true and fair view according to the applicable accounting standards. We confirm that the best of our knowledge believe having such inquiries is considered necessary to purposefully appropriate information. Itself. Financial statement. We have fulfilled responsibility as set out the terms of audit engagement, detailing 17th the prepare financial statement accordance with the financial reporting framework. In particular, financial statements are due true and fair view in accordance with applicable accounting standards of India. Significant assumption used in making accounting estimates, including those measures, are fair or reasonable. Related by transactions has been appropriately accounted for and disclosed in accordance with the requirement and applicable accounting standards in India. All the events subsequent to the data of financial statements and other applicable accounting standards in India require adjustment and disclosure has been adjusted in SA 560. And the effect of uncorrected misstatement are immaterial for the both individually and aggregate. So the financial statement, the whole list and uncorrected mistakes and attached to the financial SA 450. Information provided. We have provided you with access to all the information. You are aware of the relevant to preparation financial statement, just records, documentation matters. Additional information you have requested from the purpose of the audit and unrestricted access to the person with the entities from whom determine the necessary obtain audit evidence. All the transaction has been recorded in accordance with the records and reflect a financial statement. We have disclosed as a result of assessment of the risk that financial statement is materially misstated and the result of the fraud. We have disclosed to you the information relating to the fraud and suspected fraud that is aware of the fact the entity is involved. Management employs a definite roles internal control. Other those are the fact will be material effect of the financial statement. We have disclosed you all the information relating to the allegation of fraud, suspect of fraud affected entity financial statement, communicated to the employees, former employees, analysts, and regulatory others. We have disclosed you the following information: non-compliance with substances or the compliances of the laws or regulations and the effect to be considered and preparing financial statement. We have disclosed you the identity, the entities, related party transaction of the Kaba chief officer. Reporting. After studying the chapter, you will get different types of unmodified opinion. Reporting the requirement of different types of unmodified opinion, modified opinion as standard of auditing. Identify the different aspect of reporting as standard of auditing. Determine the applying knowledge of reporting and further study and professional practice. Overview. Audit report. Meaning, types of audit report, elements of audit report, and auditing reporting format. CA was inviting to attend the seminar on auditing inclusion and reporting responsibility in auditor SA7 and auditor series organized by the local branch of WRCICI. The SARC and realizing the importance of the topic of content heightening the regulatory gap between continues highlighting the media. He made sure that attend the seminar. An eminent speaker brought out some significant report audit report accordance with auditing audit report and documentation means those auditors express opinion significant to the contents of the audit paramount. The discussion therefore is such an issue. One learned speaker underlying the need of expressing an appropriate opinion by auditor to view the rapid changes in the business environment. If the modified opinion is warranted in accordance with 705, which option must be expressed by auditors claiming basis of such opinion that involves evidence points to misstating the fact of which both material provision and auditor should not hesitate to express advance opinion on the report. It may also be held that loud and clear the auditor should try to challenge the matter which is underlying assumption which should not be merely accepting by the auditor by way of significant implication of auditor report. It's trying to be expressed in the going concern assumption. Auditor should go out to seek whether the going appropriate preparation of financial statement by the client by going through the client's assessment. If the client has unable to made its assessment, auditor should request the management according to the justification of the following such assumption. Such a manner is immediate and direct implementation of auditor's report. This is auditors in judgment use going concern basis of accounting and appropriate. As well as opinions need to be expressed. Rising the alarm it is clearly transmitted by the matter which means crucial to taking quickly. Ascensuring the value of emphasis of matter para it is shared by another speaker. How to use a paragraph on audit report. Other fundamental report using such a paragraph in the accordance with SA 705. Such paragraphs cannot be used in respect of matter by which modification of opinion is required. This paragraph is not substitute for the modified opinion. And underscoring the increase in the communication with the valid of the audit reporting by highlighting the key audit matters and identifying the report approach. It is found that not such matters stated in the SSR on point named in the address each matter and performing the audit procedure stated in the audit procedure audit reports. Assuring that the auditor have to conclude the audit field. You may stabilize the assurance and audit report issuance of the audit report and accumulating audit practice. It is the most important deliverable in statutory auditor. The audit report is a very important medium of communication that is auditor expert views on the financial statement that has a significant bearing of credential of financial statement. By expressing an opinion in audit report, auditor takes up himself the greater responsibility, making the larger number of shareholders likely to place and reliance on the financial statement. And the dependence on the auditor's opinion on the financial statement, like what the auditor is necessarily required to be carefully vigilant and objective matter of preparing his report. Auditor should endure to keep his report in accordance with the reporting requirement mandated by the standard of auditing, bring about uniform issuance of auditor opinion. The auditor's report on financial statement. SI 700 variation purely declaring the auditor's report on issuance of auditor. Standard of SI 700, 701, 705, 706. SI 700 forming an opinion of the reporting and balance sheet, communicating key audit matters to independent audit 701 by in the key audit audit key in the key audit matters in auditor's reports. SI 700 modification opinion in the independent auditor, emphasis of matters a paragraph in the other matter paragraph, emphasis matter paragraph, other matter paragraph, independent auditor report. Forming an opinion or report on forming an opinion of financial statement forms and content of auditor report deals with unmodified clean opinion auditor. Communicating key audit matters in the independent audit report. To enhance the communicating value of the auditor report by providing greater transparency about the audit has been performed. Assess the user of understanding the matter that is the auditor's professional judgment were more significant in the audit the professional statement. Modification in the opinion in the auditor's report. To issue an appropriate audit report where the auditors answer the modification of audit opinion in the form of necessary. To deal with the revision form contains when modification of opinion takes place. Emphasis of matter para is then draw a line to attention to make the matter present and disclosed in the financial statement, which is fundamental for the understanding of the user. Not presenting and disclosure in the financial statement, which is relevant to the understanding of the user. It is on forming an opinion on reporting a financial statement deals with the auditor's responsibility to form an opinion on financial statement. So deal with the form and content of the auditor's report issued in the result of the auditor financial statement. Objective SI 700 is an objective of auditor was to form an opinion in the financial statement based on the evaluation of the conclusion drawn by from the auditor in SI 500 and express a clear opinion in the auditor SI 700 one of the specific purpose. SI 700 applies audit of a complete set of general purpose of financial statement or return contents require a standard of auditing aim to address the appropriate balances between the need of consistency and comparability of audit reporting globally and the need to increase the value of auditors reporting and making information provided to the auditor reports are more relevant to the user. The SI promotes the consistency of audit report and by recognizing the need of flexibility to accomplish the particular circumstances of individual jurisdiction and the consistency in the auditor report when the audit has been conducted in accordance with standard of auditing promotes the credibility of the global market and making it more reliable eligible identification of audit that may be contents of accordance with the global recognized standard. It also helps to promote the user understanding entities to unusual circumstances and events. Understanding of audit report forms a kind of audit report and forming of opinion statement. The auditor shall form an opinion on the financial statements are prepared in all material respect in accordance with applicable financial reporting framework. In order to form an opinion, the auditor shall obtain reasonable assurance about whether the financial statements are free from material misstatement that are due to fraud or error, whether the financial statements are prepared in accordance with the fair preparation framework. Auditor shall also evaluate whether the financial statements are fair presentation. Overall presentation of a structure and contents of a statement, whether the financial statement including related notes and present the underlying transaction events in the manner in which achieve the presentation. In other words, auditor shall present a unmodified opinion in the auditors conclude that the financial statements are prepared in all material respect in accordance with applicable financial reporting framework. In order to form an opinion, auditor shall conclude whether the obtained reasonable assurance that the financial statements are whole or free from material misstatement and whether due to fraud or error. Basic elements of auditor's report. SE 7 forming an opinion and reporting a financial statement. The auditor report shall form an opinion right under on financial statement and reporting an financial statement. This shall include the basic elements ordinary including the auditor's opinion contains conditions according to the title addresses how to addressee. Who is addressee, who is getting the auditor opinion, basis of the opinion, going concern, key audit matters, other information, responsibility of financial statement, auditor's responsibility of audit of financial statement, location, description of auditor's responsibility of the audit of financial statement, other reporting responsibility, signature of the auditing, place of signature, date of auditor's report. Title Auditor report shall give the title clearly indicates that the report of the independent auditor report. Independent auditor report describes the independent auditor report from the reports issued by others. Addressee the auditor's report shall address the required by the circumstances and independent. The report shall as addressed to the members of the company in case of general purpose financial statements and the board of directors or shall be special case of financial statements. Auditor opinion. The first selected auditor report shall use the auditor's opinion shall have the following heading opinion. Opinion section auditor's report shall also identify the entity where the financial statement has been audited, state the financial statement has been audited, identify the title of the statement comprising of financial statement, refer to the notes including summary of significant accounting policies, and specify the date and period covered by such each financial statement, comparison financial statement. When expressing an unmodified opinion of financial statement prepared in accordance with the fair presentation framework, auditor's opinion shall, unless otherwise required by law regulation, use one of the following phrases, which is regarded to be relevant. In an opinion, accumulating financial statement presented fairly in all material aspects in accordance with the applicable financial reporting framework, or other opinion, the accumulating financial statement use true and fair view in accordance with the applicable financial reporting framework. When expressing an unmodified opinion or financial statement presented in accordance with the compliance framework, auditor's opinion shall be accumulating financial statements are prepared in all material aspects in accordance with an applicable financial reporting framework. If the reference to the application financial reporting framework in the auditor's opinion is not to accounting standards, auditor opinion shall identify origin of the framework. Explanation of auditor financial extract of the independent auditor report in unmodified opinion. We have audited the financial statement, standalone financial statement of this company, which is comprises a standalone balance sheet on the 31st March, and these are standalone statements of the profit and loss account include the comprehensive income, standalone statement of changes in equity, and standalone statement of cash flow of the year ended by 31st March, and states that the standalone financial statements including summary of significant accounting policies and other explanatory information in our opinion and the best of our information in accordance with the explanation given to us. The aforesaid standalone financial statement give the information required to be Companies Act 2013 in the manner as required and given true and fair view in conformity with the accounting principles generally accepted in India on the state of affairs of the company as on 31st March. The profit and other comprehensive losses are changes in the equity and cash flows of the year end of the date. That opinion we have audited the standard financial company opinion based of the information explanation of the financial statement gives information as per the banking regulation 1949 and the companies act circulated guidelines issued by the Reserve Bank of India in the manner as required by the banking companies use and true and fair view conformity with the accounting standards specified in 2133 of the act read with the companies rule 2021 and other accounting policies generally accepted in India state of affairs of the board until 31st March and the profit and cash flow of the year. Basis of opinion auditors report shall include a section directly follow the opinion section and a basis of opinion that states that audit is conducted in accordance with auditing. First, refer the section of the auditor's report and describe the auditor's responsibility of standard of auditing. 124 indicating the statement auditors independent entity accordance with relevant ethical communication relevant to the auditing has complete the audit other than ethical responsibilities according to the requirement. The statement shall refer to the code of ethics issued by the ICA. State whether the auditors believe that the matter audit evidence auditor has obtained sufficient and appropriate to provide basis of the audit opinion. Extract of independent audit report, basis of unmodified opinion. We conducted our audit accordance with the standalone financial statement and under the section of 143(10) of the Act, and our responsibility under the Act as further described that auditor is responsible for the audit of the standalone financial statement. Section as per the report, we are the independent of the company accordance with the code of ethics issued by the Institute Chartered Account of India together with the ethical requirement that are relevant to our audit of the standalone financial statement under the provision of the provision Act and rules, and therefore we have fulfilled our ethical responsibility and responsibilities in accordance with the other requirement and the code of ethics. We believe that the auditor evidence has been obtained and sufficient appropriate to provide the basis of our opinion on the standalone financial statement. We have conducted an audit according to the standard of auditing specified 143(10) of the Act. Our responsibility standard on 143(10) of the Act. Our responsibility under standards are further described. The auditor responsibility of audit are standard on financial statement under the report. Under our report, we are independent of the bank in accordance with the code of ethics issued by the Institute of Chartered Account of India, together with the ethical requirements that is relevant to our audit standalone financial statements under the provision of the act and the rules thereunder, and we have fulfilled the ethical requirement in accordance with the requirement code of ethics. We believe that the audit evidence we have obtained sufficient and appropriate and provide basis of opinion going concern. Where applicable, the auditor shall report in accordance with SA 570. SA 570 deals with the auditor responsibility in audit of financial statement relating to going concern and implication of auditor report. Auditor responsibility are to obtain sufficient appropriate audit evidence regarding and conclude on the appropriateness of management using the going concern basis of accounting, the preparation of financial statement, and to conclude, based on the audit evidence obtained, that the material uncertainty exists in the entity's ability to continue in going concern. Implication of auditor report, use of going concern basis of accounting is appropriate. Adverse opinion. Use of the going concern basis of accounting appropriate but materially uncertain exists. Adequate disclosure of the material uncertainty is made on the financial statement. Unmodified opinion and separate section material uncertainty regarding to going concern. Adequate disclosure not material uncertainty is not made in financial statement. Qualify or adverse opinion mention the basis of opinion. Management unwilling to make and extend his assessment. Consider the implication of the audit report. Use of going concern basis of accounting is appropriate. If the financial statement has been prepared using the going concern basis of accounting, but the auditor's judgment, auditor uses the going concern basis of accounting in the preparation of financial statement is inappropriate. Auditor shall express the adverse opinion. Use of going concern basis of accounting is appropriate, but materially uncertain exists. Adequate disclosure of material uncertainty is made in financial statement. If adequate disclosure may about the material uncertainty is made in the financial statement, the auditor shall express an unmodified opinion. The auditor's report shall include separate section regarding the material uncertainty relating to going concern. To draw the attention or note of the financial statement that discloses the matter. State the events or conditions indicates the material uncertainty exists. They may cast a significant doubt on the entity's ability to continue on going concern, and the auditor's opinion is not modified in respect of this matter. Extract the auditors or board material uncertainty related to going concern. Material uncertainty related to going concern. We have drawn attention to note 10 of the consolidated financial statement, wherein auditors of that company has highlighted material uncertainty related to going concern of however the accounts of that company has been prepared on a going concern basis for the reasons stated in the opposite note. The auditor certain subsidiaries are associated stated in the note 11 of the consolidated financial statement highlighted the material uncertainty relating to going concern, emphasis of matter para, key audit matter relating to going concern respective audit report. We draw to the attention on 0.3 a consolidated financial statement regarding the group's ability to meet an obligation to depend on certain events which may not be materialized, including reconstruction of loan, time-bound monetization of asset, realization of regulatory arbitration claims. These are the material uncertainty that this could impact the group ability to continue the going concern. However, the group is confident in meet the obligation in the normal course of business, and accordingly, the consolidated financial statement result of the group has been prepared and going concern basis. Our opinion consolidated financial result is not modified in respect of the above matters. Adequate disclosure of the material uncertainty is not made in the financial statement. If adequate disclosure about the material uncertainty is not made in the financial statement, the auditor shall modifies an expression qualified opinion or adverse opinion as appropriate according to SA 715 revised. On the basis on the qualified adverse opinion section of the auditor's report, state the material existence uncertainty exists that may cast the significant doubt on the entity's ability to continue going concern, and the financial statement do not adversely disclose in the matter. Management unwilling to make an extent to assessment. If management is unwilling to make an extent to assessment where request to do so, the auditor consider the implication of auditor report. Where the use of the going concern is appropriate, there is no special paragraph on the auditor report mention the fact. CA Muthukumar is an another auditor of the Tran Fam Limited as a financial year. While concluding the audit, the CA Muthukumar determines the use of unmodified opinion. Through also concluded that the material uncertainty exists in the respect of the company's ability to continue going concern accident of returning litigation regarding the labor laws. He is a view that company has made appropriate disclosure in respect of its pending litigation. The notes or accounts annexed to the financial statement of Trump Limited. Explain how CA Muthukumar deals with the above situation audit report. Material uncertainty to going concern. We have drawn attention to point 10 on the financial statement that indicates the outcomes of litigation in the accounts of labor law and pending in the case of court against 31st March. As a later note 11 that in events and a condition indicates a material uncertainty exists and that may cause a doubt in the company's ability to continue going concern. Our opinion is not modified in respect of this matter. Key audit matters. The audit completes its general purpose financial statements of the listed entities. Auditors shall communicate the key audit matters. The auditors report according to SS1. These auditors otherwise require law and regulation to decide the key communicate the key audit matters to the auditors report. Auditors shall also according to the SS7 701. Definition of key audit matters. The key audit matters are the matters that the auditor's professional judgments are most significant in the audit work financial statement, the current financial statement. And the key audit matters are the manner of communicate with those other information. When the application auditor shall report the applicable SE 710 provides the responsibility of the financial statement. Auditor shall include section head of responsibility management in the financial statement. The auditor report shall use the term of appreciation, appropriate contents of legal framework. The entity need not to specialize to the management. These entities are appropriate reference to those other governance. The section to the auditor's report shall describe the management responsibility for preparing financial statement in accordance with the appropriate financial statement framework and the internal controls of management determine necessary enable the preparation of financial statement and free from material misstatement are due whether due to fraud or error. In the section, the auditor's report describes the management responsibility, assessing the entity's ability to continue as a going concern, whether the use of going concern basis of accounting is appropriate as it is disclosing, if applicable, matter relating to the going concern. Explanation of management responsibility for assessing shall include description when to use the going concern basis of accounting is appropriate. The section of auditor's report shall also identify the responsibility for oversight of financial reporting process. When the response of such oversight are different from those who fulfill the responsibility of describing the next para, in this case, heading of the section shall those charged with governance and such terms are appropriate in context of legal framework applicable to entity. When the financial statements are prepared in accordance with the fair presentation framework, the description of the responsibility of financial statement of the auditor's report shall refer to presentation and fair presentation, preparation and fair presentation of financial statement. The preparation of financial statement that gives true and fair view is appropriate as a circumstances. Auditor's responsibility for audit of financial statement. Auditor report shall include a section heading of the auditor's responsibility of auditing financial statement. The section of the heading auditor report shall state the objective of the auditor as to obtain reasonable assurance about whether the financial statements are whole or free from material misstatement due from fraud or error. Issue the audit report including in the audit opinion. A state of the reasonable assurance is the highest level of assurance but not the guarantee that the audit is conducted in accordance with auditing will always detect the material misstatement when it exists and state the misstatement can arise from the fraud and error or either. Describe that they consider material if individually or in aggregate and they could reasonably expect the influence of economic decision of user taken on the basis of the financial statement. Provide definition and description of materiality in accordance with the applicable financial reporting framework. Auditor responsibility in the audit of financial statement section. Auditor report shall follow. Auditor responsibility to auditing financial statement to express a professional judgment and maintain professional skepticism throughout the audit and center of auditing. Describe the audit stating that the auditor responsibility are to identify assess the risk of material misstatement in the financial statement, to obtain understanding of internal control and audit of recent financial audit procedure, evaluate the appropriateness of accounting policies, reasonable accounting estimates, related party and related disclosure of the management. To conclude appropriate management using going concern assumption, to evaluate the overall presentation of structural content of financial statement, to describe the auditor's responsibility in the audit group's engagement as per IC 600 using our cover other in the author auditor. The state that as part of the audit is accordance with the SEA, the auditor started auditing, exercising the professional judgment and maintaining professional systems throughout the audit, and describe the audit as taking the auditor responsibility are to identify and assess the risk of material misstatement of financial statement, whether due to fraud or error, to design and perform audit procedure with respective to the case, to obtain audit evidence and sufficient appropriate audit risk, provide to change on the auditor's opinion. The risk of a non-detecting a material misstatement resulting from fraud is higher than the one resulting of error. As a result, may be include collusion, forgery, intention, omission, misrepresentation, other override of internal control. To obtain understanding of internal control relevant to the audit in order to design the audit procedure as an appropriate circumstances, but not the purpose of expressing an opinion on effectiveness of an entity's internal control. Circumstances when the auditor has to responsibility to express an opinion in effectiveness of internal control is conjugating with the audit of financial statement. Auditor shall omit the phase that auditor considering the internal control is not the purpose of expressing opinion on the effectiveness of the entity's internal control. To evaluate the appropriateness, accounting policies, use and reasonable accounting estimates and related disclosures. To conduct the appropriate management using going concern basis. The accounting and basis of the audit evidence obtained when the material uncertainty exists related to the event condition that may be cause significant doubt on the entity's ability to continue going concern. If the auditor concludes that material uncertainty exists, an auditor is required to draw attention in the auditor's report to the related disclosure in the financial statement, or if the disclosure is inadequate, to modify the opinion. Auditors conclude the basis of the audit evidence obtained as up to the date of auditor's report. However, the future events on some conditions may cause the entity to cease the contribute going concern. Whether the financial statements are prepared in accordance with fair representation, to evaluate the overall presentation structure and contents of financial statement, including disclosure whether the financial statement present underlying transactions or events are man achieve this presentation. SA 600. Using the work of another auditor applies describing the auditor's responsibility in the group audit engagement by stating the division of responsibility for the financial information of the entity by indicating the extent of which financial information of the company is audited by the other auditor, which is included in the financial information of the entity, that is, number of division, branches, number of subsidiaries, other components are audited by the other auditor. The auditor responsibility of audit of financial statement section of the auditor reporting and etc. In the state that the auditor communicates with those charged with governance regarding, among other matter, the planned scope and time of the audit, the significant audit finding, including any audit deficiencies, internal control that the auditor identifies during the audit. State the auditor provide the changes charged with governance with the statement of auditor. Comply with the relevant ethical requirement regarding independence. Communicate with them in all relationship. Other matters that may reasonable throughout the year the auditor's independence as applicable related safeguards. For the audit of financial statement to all the entities for which auditor matters are communicated in accordance with C701. It states that the matter communicated with those charged with governance, auditor determines the matter that are more significant in the audit of financial statements of the current period and therefore the key audit matter. In accordance with C701, auditor describe the matter of auditor report unless law regulation preclude the public disclosure about the matter. This extreme last circumstances, the auditor determines that matter could not be communicated to the auditor report because adverse consequences of doing so reasonable to expect outweigh the public interest benefits of communication. Location describes the auditor responsibility of the audit report. Statement describes the auditor responsibility of audit financial statement requires and not be include the location.